All right, good afternoon. It's 4th April, about 3:22 in the wheat capital of the world, Kansas City. So this is Mike O'Day. I'm going to give you a quick little wheat update for just for our global outlook for April. I've got to go down to Panama and do a quick little outlook for our Latin American customers that are our Latin America commodity outlook that our Miami office sponsors. So I put this together. It's going to be kind of a little bit of a short one, but I wanted to get something put out because we have new crop wheat acres finally released by the USDA, and we'll take a look at some global stuff and just talk about the markets in general. So go ahead and get started here. So as always, I work for a publicly traded company, and this is my disclaimer, and I am disclaiming that it is a disclaimer, so let's disclaim that, and we'll move on. So just take a look at a few of the highlights for the wheat market this year, or what's going on the last few weeks. This is kind of my what I'm building my outlooks around right now is kind of the same thing we've been talking about, honestly. About the only bullish thing we see is headline risk, and we've seen some of that this week and last week with some issues with some of the Russian exporters. Started out with RIF having issues getting FIDOs on some vessels they had loaded. And last night we heard about Aston was having some issues. They came out today and said, no, they don't have issues, but we heard there was 2 vessels hung up. I think this will all get resolved, but it sure looks like the Russian government is going to do more about, they're going to decide who's going to get the vast majority of the Russian export business going forward. This afternoon, there was another headline that came out that said that 2 vessels were loaded for Egypt were having FIDO issues with quality, and RIF was involved in those. Like I said, all this gets resolved. There's plenty of wheat to export. It's just certain companies are probably going to wind up doing more. So we did see crude rally this afternoon too on some additional escalation of Mideast tension. So like I said, the only thing we've got going for the bolt side right now is headline risk and a little bit of weather, and we'll get into that. The funds are still short. They just keep selling rallies. I don't see that ending, especially with the carry structure coming back in. Remember, funds like to sell carries. Russian FOB values and exports continue to be the cheapest thing the most bearish thing we see in this market. I don't see that changing going into May and June. The weather will probably dictate some of that. But for now, we just have to go with the idea that, yes, we've seen Russian FOB values rally a bit off these exporter headlines. We're probably 10, 15 bucks a ton higher than the lows were put in. But what's the upside of that? Another 5, 10 bucks, who knows? But we did see the Tunisia business get priced today for May, and it figured like 200 bucks a ton FOB for 11.50. So even though we do see some headlines, the most consistent thing we see is these Russian values staying pretty flat and pretty low. We did see our new crop acres come out on the report last week on Thursday. And, we had a couple surprises. We'll get into that. But right now, I would tell you U.S. production and stocks is a bearish feature for the moment. One of the bullish things we're watching is weather in North Africa on crop production there, and EU with the issues there, too wet in the west, too dry in the east, and we'll get into that a little bit. But longer term, we're going to look at just continue to be what's global production going to be. Are we going to continue to see issues with Canadian weather, U.S. weather, Australian weather, and we'll take a look at some of those. But again, it's where we're getting stuff planted, what the weather's going to do, but the costs keep escalating for producers, and prices are down. We saw a story today where the Polish government's going to subsidize the Polish farmer. So if they can get a subsidy on top of selling their cash wheat, that's an issue in itself, because we all know what subsidies do. They create too much stuff, because if the producer's going to get paid just for doing what he does, he's going to do more of that. So something to keep in perspective. Real quick look at just the market structure. And I haven't seen anything much new here. This is our look at all wheat fund positions: KC, Chicago, Minneapolis, and Paris. And you can see we're still on the lower end of the fund positions. We saw a little bit of short covering a couple weeks ago, but the funds came back right in and sold Chicago wheat down. We have seen a pretty significant short covering here in Matif, which is pretty interesting when you look at the market over there, especially from a carry structure. You've got huge carry between the May and the SEP. So that's a little bit of risk coming off of that market. We've seen some active spreading between Paris and the Chicago contract. Probably keep an eye on that. But like I said, we've seen good short covering in Matif, but additional selling in Chicago here. Just a real quick look at how they stack up from a individual contract perspective. So this is Chicago. You can see the commercials are actually long a little bit after doing all the short covering. The funds were selling it to them, so we've got the fund sell here. And the index funds have been pretty static. The reason I'm putting up here is because I want to show what KC's done. So KC, you've got both commercial and fund short, but you got a record new long and index. And this is interesting to me. I'm not sure why you're seeing the index funds come in here. I don't think that hedging your inflation exposure in Kansas City wheat's probably the smartest thing, but it's more about the dollar values involved on these index funds. As KC wheat futures have come down, they've just got to add to the position. But we always consider index funds kind of liquidity killers because that volume is really not available to the market until they decide to change their price direction ideas. So it can create a little more volatility if we do see some activity in the market. Minneapolis, nothing new here. We've seen this big commercial long get trimmed off a little bit because of some fund short covering. But when we look at the stocks report, you'll see there's still a huge amount of spring wheat to be bought from the producer. And this goes to this commercial long. They've been selling wheat. They're just buying futures to cover their hedge. And we'll just have to continue to see if we get prices high enough or the farmer finally just gives up and sells spring wheat. Just a quick little chart here. I like to put this up when I think about it. It's just total managed money as a percent of OI. And the red line Chicago wheat, you can see we got up to over 70% of fund money was 70% of the total overall position was fund money. That's backed off a little bit. But both KC and Minneapolis are kind of hovering around that 50, 60%. All this means is if you do see a situation where we have an incident where you'd see something bullish come out of Russia or the Black Sea or something like that, the move in the velocity of the move in the market could be pretty high if the funds have to come in and cover because of the amount of open interest that is involved in their positions. Real quick, take a look at the world wheat. Just throw this up here. Shows world wheat production versus total use and ending stocks. We continue to see this 4-year trend of lower ending stocks with production going flat. Demand stays pretty good, but we just see this ending stocks number keep coming down, and that's why we're pretty focused on this new crop coming on, how this production is going to look as we move into the marketing year. We get past harvest and see where northern hemisphere supplies come in and start stacking up southern hemisphere potential. Again, we look at our major wheat exporters carry out to use. This chart's from the March report. No real change in it. Basically, still have about a 15% carry out to use from major exporters. About 60 million metric tons, a little over that on the carry out. And this continues to be my estimate. We're about 65, 66 million metric tons, about a 16% carry out to use. And this still all just goes back to Ukraine or Russian crop size 3 years ago. And I just have a little smaller EU export number. We'll get the April crop report out next week. I don't see much change in that. When we get into May is when we start to see some changes in these global numbers going forward. Just a quick look at global FOB prices, you can see the green line is Russian FOB values. And we dipped down to a little under $200 a metric ton in early March. We've kind of seen this market rebound like we've been talking about. But you can see these are Canadian values, but this is Gulf hard wheat, still 70, 80 bucks a ton out of the mix versus Russian. And this is gray line is French, and the light blue line is Gulf soft wheat. Even Gulf soft wheat priced itself out of the market versus French and Russian moving forward. Oh, just throw this up here again. I redid this chart. It continues to show the USDA's got a fairly significant increase in global domestic use year over year. The only thing I like to show this chart is very rarely do you get 2 years in a row of declines like we had last year. So this increase may be too much, but we'll see an increase in historically on domestic use. And you can see the years that we do get these declines, we tend to get fairly significant jumps either 1 or 2 years post this, as we see the consumptive, the end user consumer either start to rebuild stocks or add to whatever they have. Nothing really new on the importers. We're watching this North African production pretty close. So we've got global production from the major importers down a little bit. But again, we see these imports down too. And it really goes back to just this continuing high cost of trade finance, issues with foreign currency reserves, devaluations of currencies. We saw the Egyptian pound get devalued again. Nigerian currencies been devalued. So as we move into this new crop season, I do think we're going to see the importers try to capture as much wheat at harvest as they can with cheaper prices. But again, do they have the currency and the financing to get that done? Oh, real quick, just take a look at Russia. I just simply took the chart we did the last couple months ago and updated it. These nice charts are from our friends at the Commodity Weather Group. They provide us with some excellent weather stuff, and it's easy for me to look at this stuff and bring it into a presentation. So, we're looking at Russian wheat mainly on the winters. This is the majority of the winter wheat over here, and southern Russia is where the highest production is. And you can see, looking at this is as of a couple of days ago, we're still total moisture for that time frame is extremely high. And I looked at another chart today that showed the subsoil reserves for these areas. It's got plenty of moisture to get them through the month of April. Now, once we get through April and this weather pattern that's in place right now doesn't change, that shows this hot, dry trend, then we'll have to start talking about this Russian wheat. But for now, I'm going to continue to go with, a 90 to 93 million metric ton crop. We'll just have to see how much we get in how much moisture we get in that May-June timeframe, which is the key timeframe, like it is globally. We're still going to watch how much this Ukrainian wheat gets harvested. Acres are down, but how much of these eastern areas of the Ukraine get counted as Russian production? But for now, we're just going to go with the idea that the Russian winter wheat crop is going to be pretty good, and it's going to keep pressure on exports moving forward. Ukraine, it's remarkable the amount of exports they just keep pushing out. I don't have an updated chart on this through March. I should be able to get that in a couple of days. But when you look at this, they're pushing out just as much grain in the export side as they were 2 to 3 years ago. The red is the grain corridor that the Ukrainians have established. Green is the Danube ports. But like I said, until we see a situation where the Russians do something to shut down the Odessa export facilities, Ukraine's just going to keep exporting grain. The EU's our story, and again, we're going to rely on some charts from our friends at Commodity Weather Group. This just shows how much rain they've had since August. So this is cumulative rainfall, and you can see the areas they've got some issues. And I forgot to throw it on here. I was going to throw it on here. I've got the yields from the years we have these high rainfall amounts, specifically in France, that impacts the yields quite a bit. I forgot to throw it in here, but when we see these high rainfall amounts, we tend to see issues with French wheat yields because it's just too wet. run into quality issues. We know the planted areas are down 10 to 15% across Germany and France. A little bit of issues in the Baltics. The Balkans remain dry over here. We've seen some dry areas pop up in Romania and Bulgaria. But the biggest thing is we watched these French wheat ratings. They were 66% good to excellent last week, but they were over 90 a year ago when we had the excellent crops. The maps stay wet, so we're just going to look at a smaller wheat production coming out of the EU, and how much that is will really determine some of the export markets we watch. Just throw this up here real quick. This is our 5-year price percentage chart of Paris wheat, milling wheat. Yeah, we dipped down to some very low levels. We got down to close to 180 bucks a ton. That's historically a very good level to hold. And I think if we run back down there again, this 180 to 200 level is a very good point for consumers to start pricing. It's not very good for the farmer, though. So the EU producer is going to be jammed up with lower prices again this year, just like the US producer is going to be. North Africa is a story. It's going to be about production. Same maps I updated from September to the end of, or to the other day in April, on how much moisture we've seen across the North African wheat producing regions. Morocco, specifically, they put out a note the other day, they're going to have to import up to 5 million tons of wheat. So we're just going to see more wheat imports potentially into the North African regions. And it's going to come down to, is it going to be Russian? Is it going to be EU wheat? And how much can they buy? And, what levels do they come in here and try to capture as much supply as they can? Or do they just stay hand to mouth with the carries in the futures market driving the front end down and making it tough to go out and buy in the curve? Just kept this chart in here from the last time we did this. I'm kind of updating some of this stuff, but you can just see quickly, if you want to look back on this stuff later, production between Algeria, Morocco, Egypt, and Tunisia, how much wheat they produced. So this is what they did last year. We're probably looking at a smaller crop this year. Imports are probably going to have to be a little higher than they were a year ago. But again, you've just got this growing population base across this region that will have to have more and more subsidized food for the people. So the governments there are going to be in a jam when it comes to financing and maintaining food supplies. This is just an interesting chart that's on this wheat consumption per capita. I need to probably do a little more work on that, but I just kept it in this slide. Let's move on to Canada. The only thing I want to talk about Canada is the dryness we see in place here. But I want to throw this S&D up here just to highlight how tight stocks are. So we've seen stocks decline 3 years in a row, actually 4 years from here, but we're well below historical. We used to think that, between 15 and 17 million metric tons was Canadian carryout, but this really sharp drop in production in 21 saw these stocks drop significantly, and they just kept exporting wheat. So if you come in with a short crop again this next year, how much exporting can Canada really do? We know acres are going to be smaller in Ontario on soft wheat. It's over here, and they're a little bit dry, but not bad. But it's the prairies we're going to have to focus on the spring wheat. And the maps I see today stay fairly dry until July. I do see a shift in some of the longer range maps that bring some moisture in kind of July, August. The question is that going to be too late? Australia is something to put on your radar. It's not a problem yet. I've been talking to our guys down there in Sydney. The only thing they talk about is it's very dry in Australia, in the West Australia. West Australia and South Australia are the areas they're watching. Plenty of moisture in the east, in New South Wales and Vic, and up into Queensland. But you look at these maps, there's very little rainfall that is forecast for this area over here in WA and SA. And you can see from our chart from our friends at Commodity Weather Group again, the lack of moisture for the growing season. Now they're just getting started to plant wheat. So they start in April, May is the time we're start talking about them planting wheat. So this is something to keep on the radar as we move forward. India, I'm not going to talk a lot about India, but there's a lot of talk of them pulling their stocks down. The U.S. attaché came out the other day talking about a 112 million metric ton crop, which should, in theory, maintain the carryout they have. But these stocks are just historically low. Crop's not completely made yet. So we've seen prices come down in response to the adequate wheat supplies, but I don't know. We'll just have to see if they do have to come in here and become an importer. The question is, where are they at long term if this total use climbs back up to the levels they were at just 4 or 5 years ago? And from a population perspective, looking at this demographics, you would think this demand will continue to grow. And as these stocks get under, they get under 7 million metric tons, they almost have to come in and import some wheat. Longer term story, but something to watch. I'm not going to talk too much about China. We're watching their crop. I can tell you right now, their new crop looks in pretty good shape. They've had plenty of moisture, plenty of acres got planted. Shouldn't see the issues they had last year. They'll probably still import wheat just to meet their WTO commitments. Question is how much and from where. If we have a shorter crop in both the EU, shorter crop in Australia, do they have to come to the U.S. just to meet some of these WTO requirements? I don't see them buying soft wheat this year like they did, but if they have to come for wheat, they'll come for cheapest. And I just threw this chart up here showing the export sales with the cancellations that are in place. This is another one of those longer term stories. If they have to buy 10, 12 million metric tons of wheat, where do they buy it? Now, they can, I saw where they now have FIDOs in place to import Russian spring wheat. They still don't have FIDOs in place to import Russian winters. But I think that could probably quickly be corrected if they need to. So just another longer term story. Real quick on the U.S., I'm not going to get too deep on the U.S., just a couple of things to look at. And we got our planted acres from the report at the end of March. Total acres are down 4%. We're about 47.5 million acres out there. You can look at this map and kind of appreciate where they're at. I do think that they made some changes. They increased Kansas on winters and a couple other things. So let's just look at winter wheat acres. So on winters, they increased Kansas about 200 million or 200,000, excuse me. This is from the January crop report. So year over year, we're down 400, but we're actually higher than the Jan plantings report. So is Colorado, so is Oklahoma. But overall, the hard wheat states were down 5% from a year ago. The 5 southern states were down about 1.4 million acres. Are actually up acres up in the northern plains, mainly due to the 100,000 acre increase in Montana. The P&W is pretty flat. Now, soft wheat was the big surprise. Soft wheat acres were down 15% year over year. I was looking for acres to be down maybe 5 to 7%, not 15%. And I've been told by some pretty smart people I know in this market over here that these acres are higher. So we'll just have to see how we come in here at the end of the year. But we know how these markets work. We trade what's in front of us for now. So we'll just have to see how these yields look. But when you look at these acres in general, it's just going to create a situation where we've got plenty of hard red winter wheat. We may have an issue with soft wheat balance sheets. I don't think we will because we're going to shut off exports. And let's look at spring wheat acres. So kind of a busy chart here, but I wanted to put a couple of things in here. So these are the spring wheat acres. They're actually up year over year. And it's mainly off the acres in Minnesota. Now, talking to our guys up there and a couple of other customers I have up here, the Red River Valley saw a pretty big flip last year from corn to spring wheat acres. So these guys are getting back in their rotations. But I've also had some people question this number. So we'll just have to see how this evolves. I think the South Dakota number is good being up like it is, the North Dakota number being down like it is, and Montana being flat. So overall, when you look at the hard spring wheat acres, they're about 300,000 higher than a year ago, just looking at a production number. So all springs were up 1%. Hard red spring acres were up 190K. Durum acres were up 22%. That's a good number. I think that's a good number. That's a mistype there. Should be up. But yeah, we knew Durum acres are going to be up just because of price and rotations and a couple other things. But when you look at this economic view of acres, this is a nice little chart that Bevan's put together for me. Corn is still clear leader when it comes to planting, and so soy versus spring wheat. So you have to kind of question when we come in here getting corn and beans planted if the spring wheat number stays the same. And you can see where the durum acres are up down here. So stocks, no real surprises there. This is both on and off farm over here. Winter wheat acres are up 23 million bushels on stocks. But again, you see where the big stocks are at. They're up here in the spring wheat country. White wheat is actually down. Now the on-farm stocks, you can really see up here. Farmers holding a lot of spring wheat. That goes back to our look at the fund positions, commercials versus funds when it comes to the cash markets. Spring wheat traders have been selling wheat, can't buy from the farmer, long futures against those basis sales. And we'll just have to see when the spring wheat farmer finally turns loose of wheat. But I'll tell you, if it stays, these weather patterns stay dry, we may see these guys hang on to this stuff. They were well rewarded 3 years ago by hanging on to wheat, right? Who clipped the most coupons on the Russian wheat rally? The spring wheat farmer did. So we'll see what they do. Just looking at overall U.S. wheat supply and demand, we're probably going to see production creep back up toward, I think I'm like 1.95 billion bushel production combined. But we're going to raise ending stocks, and we're going to see this production push these stocks up. On the demand side, I've got exports about the same year over year. Feeding will probably be the real outlier. We could probably see more hard wheat fed than we think, but I'm not plugging that in yet. And food use looks to be about the same. So wheat carryout, yeah, we could push carryout, between 850 and close to 900 million bushels. So when you look at just a pure U.S. wheat carryout chart, it's fairly bearish across everything. Look at a few class things. I'm not going to get too deep here, but we got our first crop production report out the other day on conditions, and this is our initial crop ratings. Very good. Kansas is 48% good to excellent versus 16 a year ago. You can see Oklahoma. The southern plain states are in great shape compared to a year ago. Now, all this wheat needs a drink, and these conditions can turn pretty fast, but our initial numbers are good. Soft wheat's good. PNW is okay. Montana looks pretty good, so we'll just have to monitor these crop ratings as we move forward. So we can take these crop ratings and plug them into our index we use for yield. Now, this is real variable, and it's real early in the season. But if you just take a look what the data provides us today, our condition index would indicate we've got a hard wheat winter yield of about 40.8 where we're at today. I can tell you our model was pretty good last year, predicting this number down here, this low hard wheat yield production number. So we'll keep an eye on this, and it'll really change as you get into April and May, latter part of April and first part of May. Soft wheat, quite a bit lower. So our index is at 277 and puts a yield around 59 versus the record yield we had last year. So we'll just have to keep an eye on this, the soft wheat index, and see where it takes us on some of these yield ideas. So a couple things here on hard wheat. So I've got my production estimates here. So I've got 3 yields here. So this is my average yield I'm using right now with 76% harvested on winters. It gets you a crop of about 813 million bushels. If you use that yield that we have on our index right now, it's about a 750 crop. And if you want to have a bigger crop, like we've seen potentially up to 46 bushel yield, That's an 850 crop. Well, what's that do for you? That gets you, if you use this 813, that's what I'm plugging in now. Carry out's almost 500 million bushels. That's pretty bearish on winter wheat, on KC futures. It's almost an 80% carry out to use. And it's mainly because we're just not going to be able to recover exports. I think we need to push futures down to $5 in the July and the SEP to try to displace Russian wheat out of and French wheat out of Latin America, Mexico, a couple other markets we tend to work hard wheat into, but I don't see it right now. I've got exports at like 155 right now. I do have more feeding. I do think that with the corn basis out in western Kansas, east and down into Texas and Oklahoma, that basis is too high. It'll probably come down. But if we can get the wheat corn spread under $1, we'll feed quite a bit more wheat. But is it 25 or 50 million bushels? Well, if it's 50 million bushels, it still doesn't make a dent over here on this carry out when you look at it from a bigger picture. So we'll just have to keep watching these yield potential ideas. So this chart, it's a little busy, but all I did here is if you're close to 500 million bushel carry out, where's that? Typically you see futures. You see futures down around $5. It's very difficult, I think, to push futures below 5. And we've had a lot of debate in our office about what's the farmer do? All this, if you look at this carry out and you look at this futures price of somewhere between 5 and 520, that's pretty bullish basis longer term. So if we're 450 cash, what's the farmer do? Well, I think we buy a third of the wheat crop no matter what, because we're always going to buy the landlord share. We're going to buy cash flow. We're going to buy a couple different items people need to sell. Now, I think once you get that initial flush of cash wheat out of the way, yeah, you shut it down. But clearly, we're going to see basis rally and moving forward if we do see these values get down here. But like I said, I have a hard time pushing KC futures much below $5 just because of some of the stuff we've seen over time. A couple other things to think about. So we're probably going to get a leg of VSR in. This is variable storage rate. We'll probably get that in versus the September contract. I don't know if we're going to see enough wheat in the showcase on the delivery side, plus the cash movement to get a leg of VSR versus the July or versus the July. So the SEP is where we see it. So I went and grabbed the last time we had a leg of VSR, which was in 2018, and this is just the Hutch bid. So you can see in 2018, Hutch started out close to 20 under, which is about where we're at today. And we saw the bids go to overs versus, the July versus the SEP. And we just saw a steady basis improvement. Everybody and their dog, from a commercial terminal to a country elevator, is going to try to buy as much wheat as they can at harvest time. Because if you look at this example here, in 2018, July, we had almost 70 to 5, I think it was 70 or 75 cents a carry. We haven't seen these kind of carries in a while. People are going to want to clip some coupons, but they also need to get that wheat in position to do that. So look for basis to firm up pretty sharply after harvest, but then probably go flat after that. So looking at spreads, this is a July SEP KC wheat spread. This is where we're at today. We're somewhere down around 12 to 14. Full carry on the July SEP is around 18, and we'd have to keep that spread under 14.5. That's 80% for an extended amount of time to try to look at a leg of VSR. I just don't think we'll do that. So what I'm telling my hedgers is look for 14, 15 on a level to bull spread, the July SEP. Now SEP D's, I do think we'll get a leg on. And when you add that VSR into the storage calc, your full carry becomes 35 cents in the SEP D's. So 80% of that's 28. So we should push these spreads out pretty wide. If you want to think about the D Smarts, it's the same. It's 35 cent carry. So you can see where we're looking at historically with these carries when we're thinking about basis and spreads on some of this stuff. So, like I said, futures prices somewhere down around this 510 to 450 area is probably a level to look at. This lower third of the KC market over the last 5 years on this price percentage chart. Just for fun, since I'm going down to Panama, and we did this meeting the first week in April, this is where futures were at a year ago. We were at 876 bushel. Just a little different. Looking at spring wheat real quick, I don't have a whole lot on spring wheat. I've got a couple things to talk about, but these are my production estimates right now using the acres the USDA's got plugged in 3 different yield models. We don't have any conditions yet for spring wheat, so I don't have my model to work with. And I'll tell you, our model last year on spring wheat was not that great. Just not enough time on it. We have a lot more time to look at the hard wheat model, and it tends to perform better, as does the soft wheat model. But we'll watch this pretty close. I see carryout about unchanged on spring wheat with what we know today. Looking at using this 452 million production. Last year was 468. So this is kind of the number I'm using right now in all my balance sheets. On the demand side, just keep things pretty steady. Steady on the food side, steady on the export side. And one thing to look at here. This is the current spring wheat basis chart. This is 14 Pro across Minneapolis, across Chicago. So we're kind of right in the middle of the historical average. When you look at the SEPT Minneapolis spread, this is our new crop spread. A lot of this is going to depend on, the weather, what we look at from a crop production side. Full carry in SEPT is 34 cents. Full carry is around 27. Now I'm going to tell people if you get down around here 22, 24, and you need to lock in do some bull spreading, it's probably an area to look at. So I want to look back at the history of the SEPT spread on July 1st. And if we're around a 30, I've got like carry out around 35% carry out to use. This is kind of that box. We don't get much below 20. We did see, the big break last year on the SEPT spread, pushing it out, close to 32 cents a bushel. But that was real late into delivery. So I don't know if we'll see this type of action again. So you can see historically where the spread trades, but we'll just have to see how the production looks. One thing we talked about this the last time. I wanted to highlight this again when we're looking at spring wheat. I wanted to point out these are our spring wheat exports for the year down here. Philippines is our ¡1 destination, but Mexico's #2. And the gray is rail. And you can see how much our spring wheat exports to Mexico are year over year. And I think this is a lot of it. This is when the CP and the NS, or the KCS, the CP and the KCS merged, it brought this whole network of rail down into this market. Now, there's a couple other things that are involved in that. Hard wheat prices, the importation of lower pro Russian wheat into these areas down here that do need more spring wheat protein as blenders. But, this may be something more of a long-term thing we're going to have to talk about. Spring wheat prices, I don't know where we're going to go in spring wheat. $6 would be pretty hard to get down to, I think, unless we see just a complete collapse in both KC and Chicago wheat. Now, one thing we got to talk about on these wheat prices is where corn's going to be. If corn's at $4 in October, November, where are these wheat prices going to be? Well, clearly it's going to have a negative impact on wheat futures prices. Soft wheat real quick. These are my models I'm using right now. I'm using 382 for my soft wheat production currently. If I plug in our model on the yield side with kind of an average harvested, that's 332. So it's significantly lower than the yield I'm using today. Soft wheat carryout probably will increase. I think I've got it at 130 or 120. I can't remember what it is. But we're going to see a little bit of an increase. And it's mainly because of less exports. So you can see we've got this big spike up in exports this year, close to 170 million bushels. If we take China out of the equation, we should move back to more of a historical 120, 130 on the export side. And that will clearly allow a smaller production number to not have a big impact on the market as we would if we saw this bigger export number. China's going to remain a wild card because of that that WTO commitment and how they have to import wheat. Because if they can't get it from Australia, they can't get it from France. Where are they going to get it from? And I didn't talk about Kazakh real quick when talking about the Black Sea. Kazakh acres are down on lower plantings are looking better on their spring wheat. The Kazakh government's already put out a 12.5 crop, which is below a year ago. So we're going to have less spring wheat supplies in Kazakhstan also. Soft wheat basis, this is St. Louis. I just like to watch St. Louis as both a river and a mill proxy. You can see we got a big bounce when the Chinese program started, and we backed off with the cancellations and the program winding down. So we're below historicals, but not that much. On spreads, we're clearly going to get a leg of VSR on versus on the May, July. It's running like 89, 90% right now. So we'll get our leg on. So full carry in the SEP-Dees will then be 24 cents. So we should probably see pretty close to 22, 24 as we get out there. I don't see a need for another leg of VSR though. We should get one leg on, keep that in place maybe for a couple delivery cycles, then take a look at it. But if you want to think about 80% of full carry, you're talking about 20 cents. So 2024 is where you want to start bulk spread in the July SEP. SEP-Dees, you want to look at full carry out with the leg of VSR, it's about 35. So, you probably start at 30 to 80% of full carry is 28. So start around, 28 to 30, 32 on bulk spread. But like I said, I don't see much going on in Chicago right this year. Have to watch how much we can feed, but we're going to have plenty of corn. There's a slug of old crop corn in the eastern corn belt that's going to have to find a home going into that June, July, August, September timeframe also. So that's going to compete with feed wheat going into those southeastern markets. Chicago wheat prices, we're down probably where we need to be. Do you need to take Chicago wheat futures down to $5? Probably not. If we take KC down to 5 or 5.10, we should probably see, Chicago trade a 10, 20 cent premium to KC. I don't see a need for it to trade, 40, 50, but Chicago should carry a 10 to 15, 20 cent premium to KC. Well, that keeps these futures around, somewhere above that $5 level. And you can see we're in the lower third of the price the last 5 years. So this is a great opportunity for the consumptive side, other than having to pay for the carry out in the forward curve. Farmers not going to like it though. So question is, how much wheat do we buy at harvest? I actually think we probably buy more than people think, just from a cash flow perspective. Not going to talk too much about white wheat. It's just, these are my new crop projections. I see carry out pretty adequate for both white, and we're definitely going to rebuild Durham carry out with the higher planted acres and the higher production coming in. We got this out today from GeoGlam. They put this nice synopsis out about global crop conditions. The only thing to really highlight here is, there's some issues with rice. Again, we watched rice prices early last year, just for some of the action on both India and Vietnam. So, carbs are carbs, right? So if we see any rice production issues globally, do we see some substitution back into these markets with wheat? You can see they still show a pretty good crop potential for Russia and southern Russia. This is the Ukraine. They put this as a hot zone just because of the war going on. As you can see, Eastern Europe has got a watch on it. This is because of too much moisture. And North Africa, again, on the watch, and the poor legends over here. And the U.S. looks okay. We don't have Canadian crops to look at yet. I do think it's interesting when you look at just the corn market down here. They've got an issue with the Brazilian corn market. And you've got these massive crop failure potentials down here in southern Africa again. So are we going to have to see more imports into these markets for commodities in general? So just to kind of summarize things, Russia's wheat's going to continue to pressure the front end of the market, the cash markets and the futures markets. Don't see that changing unless we see a significant shift in Russian wheat production potential. 2/3 of the Russian wheat is winters. then we'll have to start watching that weather for both Siberia and the Kazakhstan spring wheat markets later in the year. U.S. wheat, we've got our inelastic export demand. I should have threw the chart up there, but if you look at the top 10 wheat destinations of the U.S., it's people that we have trade deficits with, or Mexico. So that's going to continue. We had the China demand this year, but don't see it next year unless something weird happens. We're going to have to take KC values down to levels that will increase demand. Is that $5? Maybe, maybe not. And we'll just have to watch spring wheat plantings and weather. The Northern Hemisphere, there's very little risk premium in the growing season that I see. You look at Paris futures, there's very little there. You look at U.S. futures, there's very little there. So we'll just have to see how the crop evolves. It's too wet in the EU. In the UK, it's too dry in the Eastern EU and Southern Russia, but a lot of time for this to evolve. I do think this drought in Canada and the U.S. Northern Plains is a significant issue. It's not only going to be for spring wheat, but potentially for row crops too. Global demand remains flat. Cost of commodities, trade finance, interest rates, none of this is changing. So we'll keep an eye on that. So for our outliers, we're going to watch this North African demand and drought. How much wheat are they really going to have to import? Do we see more Russian wheat flow with less French wheat? What about logistics? What about trade finance? All those issues. India, I don't see that as a problem this year, but boy, you got to keep your eye on that going forward in the next couple of years. All you have to do is put them, for 3 to 4 million metric tons or 5 million metric tons going forward with the growth of your population and flattening out of production, and that could shift these global balance sheets a little bit. We do need to see good production. We showed that first chart. We've seen global production flatten out, but carryout's been coming down. So if you see short crops anywhere, you could have a longer term impact on these global balance sheets, especially from the major exporter perspective. Like I said, we've got geopolitics. We've got a lot of problems in the Middle East. We got issues with shipping, not only the Red Sea, but through the Gulf of Aden right now. I do see an improvement in the weather for the Panama Canal area going forward. So we could see that situation alleviate. But, higher interest rates, demographics, short-term, long-term are going to continue to drive these commodity markets. So that's all I've got. Like I said, I just want to get a quick kind of outlook out, and we'll probably do one. I don't know if I'll do one in May or probably wait till June. But anybody has any questions, shoot me a note. Thank you.